Welcome to Legal and Wealthy, the podcast for lawyers who are ready to stop playing small and start building true wealth and a career and life of their dreams, powerfully and purposefully. Whether you're a law student, new associate, or seasoned attorney, this show is for those who are ready to take charge of their law career in a new way. I'm your host, Lauren Klein, attorney, law firm owner, professor, and founder of Legal and Wealthy. Here, we don't just practice law, we practice liberation and becoming wealthy attorneys. Because being a great lawyer shouldn't come at the cost of your time, your peace, or your financial freedom. Every week, you'll get the strategy, mindset, and wealth building guidance that law school never gave you. So you can go from just surviving your career to building a legacy through it. Let's get to work. Welcome back to Legal and Wealthy, the show where we help lawyers build wealth, protect their peace, and live a life that actually feels good. I'm your host, Lauren Klein, and I am really thrilled to be sitting here today with Erik Brenner. This is an episode you're going to want to save, you're going to want to share, because we're going to be talking about building wealth, which we talk about a lot on this show, but kind of from a different perspective. We're going to be touching on retirement and having, kind of that family office within your life, even if you aren't a billionaire yet, and really some other very, very cool topics, things that no one teaches us in law school. So we're going to be talking about how to build wealth so you don't lose it later. Erik, welcome to the show.
Hey, it's great to be here. Thanks for having me.
I'm so excited to dive in. So I'll just give a quick little bio and then we'll just jump into this topic because it really is a juicy one. So Erik Brenner, CFP, is the president and CEO of Hilltop Wealth and Tax Solutions, a fiduciary firm that integrates advanced financial planning with in-house tax strategy. And I love that we're going to touch on tax today. With over 30 years of experience, Erik has specialized in helping high net worth individuals, including pre-retirees, business owners. I know we have a lot of business owners listening today and other professionals. It's all about transitioning from just saving to building wealth and preserving it for our retirement and our future, of course. So welcome. Let's dive in with kind of talking about the retirement piece. So guys, if you hear retirement and you're like, oh man, this topic is not sexy, I'm just gonna, skip on to the next episode, don't, because I really do think that this is a piece of the wealth building puzzle that often gets overlooked because it doesn't feel sexy. But I want you to imagine that you're getting closer to the end of your legal career, or you're in the middle of it like I am, and envision yourself all those years later thanking your current self for listening to this episode and then implementing. So Erik, I'd love to hear, you often say that climbing the mountain, that's the easy part, right? Growing the wealth, the income, that's the easy part. The descent is where the risk is. Can you break that down for us?
Yeah, sure. So how we use an analogy, climbing the mountain, saving, investing, right? Working, putting your kids through college, paying off debt. If you really have some good principles, good savings habits, it's easy in the sense, right? Some easier more than others. But as you get to the top and come down, the last 25 years has changed in planning for people because there's so many more choice. 25 years ago, many people retired, they had a pension, they had Social Security, they could retire with full benefits, health benefits, even if they were under 65 or Medicare age, and they'd have a pretty good retirement. Now we're responsible more for our retirements than ever. And so what we see is people have a lot of choice. When do they take Social Security? They don't have health care prior to retirement, prior to 65. Oftentimes incomes come from different income streams that are taxed differently. So I tell folks often that, look, in mountain climbing, more than 80% of the fatalities happen on the way down.
Wow. 80.
And
80.
so analogy to what, your financial life is, you can slip on a rock and that thing can take you down a long ways. And so
Yeah.
mistakes get very costly in retirement.
Wow. And What do you see, based on or as a result of the changes in the last 25-ish years? What do you see people doing? Are they just in like an analysis paralysis situation? Do they just wake up one day and think, oh, wow, I really didn't think about this? What are you kind of seeing in general? How are people reacting and how are people handling
Well,
this
there are,
stage?
I would say, a couple different camps, if you will. There are those group that, wakes up one day, as you say, and go, oh my gosh, I should have been doing this 20 years ago.
Mm-hmm.
And so you were saying, even if you're, in your career and you still have a long trajectory to retirement, you want to take some time to think about it. You don't want to be in that camp and look back and go, if I would have only known. The other piece of it is that um, there's just a lot more choice. So a lot more choices as it relates to savings in retirement plans. How do you save? How do you invest? And if people have done a good job of doing that along the way, then what happens is now you have assets to manage. How are they going to be taxed? When do I take them? What do I take first? And so that's where it can be overwhelming to kind of coordinate all of that in what's best for the situation.
So, what do you recommend if someone's listening and they're like, okay, I'm not really, all of this kind of makes sense, but I don't even know where to start. I'm earning a really great salary. My student loan debts are getting paid off. My family is growing and thriving. Like, what should someone really start to think about? I'm about to turn 40. I'm 15 years into my law career. What should if they haven't already, what should people do? Like, what should people actually start doing now?
Yeah, so I think a couple things. One is, put some thought into what does retirement look like and when.
Mm,
Is it, 60, 65, or whatever age? And maybe it's not full retirement. We're seeing a lot of people that retire to something. So they're,
yeah.
I'm going to cut back on what I'm doing, but I'm going to retire to something. And that's really a vision. And, if people out there are in their own firms, and they're running those, what is the vision of the firm? And you want to be careful on just relying for the firm to provide it all. So that's the first thing. Then the second piece is really kind of sound saving strategies. Long term savings should start with 10% of income. So if you can save 10% of your income, um, that is not touched, you're not going to touch it. That's a starting point. Now, I'm also saying that if there's matches and companies you work with and so forth, I'm saying out of your income, start 10%. Um, Long term savings, really crucial. And then determine how you should save it. Should you save it pre tax or after tax? One of the big decisions that we've seen a lot of folks, as that you mentioned in the age group, is we have Roth IRA options. We have Roth IRA options in 401ks and retirement plans now. Um, how much do I save in each area? It's good to save tax money today, but you're just, there's going to be tax down the road. And
Hmm.
so I think savings rates and then making sure that what do you have left over at the end of the month is under control. So what do you have left over at the end of the month? Hopefully you have some money set aside for something breaks down, your car breaks down, something on the house breaks down, that you can take care of that. So having a spending plan that things like that are under control. Those are some of the basics to start with.
I love that, and I love that you kind of talked about, I think a lot of lawyers hear pre-tax, post-tax, and their heads just kind of spin. So can you just give us like, I'm sure some people definitely know what you're talking about, but just like 101 on what that means.
Yeah, so pre-tax means you're deducting it today. So, if you have an income and your income's growing, you're able to put it in pre-tax, deduct it off of your income today, which is great, especially if you have higher incomes. If you're married and filing jointly and your combined income is higher, you're able to save that tax money today. However, they're down the road in retirement, there are laws in place that you have to start drawing this money out. and it's taxed at the income rate at that time. So we are in a 40-year tax low right now. I don't know where taxes are going in the future. Most people, when you ask them, they say they're going to go up. That's their feeling, right? They're just going to go up with our national debt and everything that's going on. And that's really the way when people had plans at work, besides an IRA individually, but they had a plan at work, they put it in pre-tax. Um, then there's after tax. After tax is you don't deduct it today, but if you do it in a Roth environment, it's tax-free forever and tax-free to your beneficiaries. So you build a tax-free bucket that the IRS doesn't have control over. Whereas the pre-tax, they have control over. So the challenge becomes in the savings years, do I split it all? What do I split it? And what does it look like? And making sure that, you're still saving some tax money today, but also you're setting yourself up for the future.
Yeah, and I know there's obviously no cookie cutter one size fits all, but if someone, let's say they're between 40 and 50, what do you think like a good breakdown would be? Obviously, it's so hard to say without knowing their facts.
It is. It is. I mean, it definitely is case by case. But I would say generally that if they have an option within a plan, pre and post tax, again, pre deducted retirement plan, post would be Roth. Generally, it would be at least split 50-50. So at least split the 50-50, meaning 50% of your contribution goes to pre-tax, 50% goes to Roth. However, I've seen more and more people doing more to the 100 to Roth, just in the sense of, look, I'm going to take the bite today, right? And the other thing about it is because we've done this for so long, we see the other end. So we have clients, right, that we've worked with for many, many years, and now they're in retirement. And they actually think they thought at that time, and we often talked about with clients 20 years ago, you'll be in a lower tax bracket. Well, I would tell you that's not always the case. So you're not necessarily going to be in a lower tax bracket, or you may be in a lower tax bracket and then the first few years of retirement, but maybe not long-term lifetime retirement. So at least 50-50 split, if not after tax, all the way. But again, it depends on income levels. It depends on where they fall in the tax brackets, and there's other variables there. And that's the reason for a plan.
Yeah. 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 That's going to lead to my next question in a minute, but I want to get your hot take. How do you feel about backdoor Roth IRAs? Because we have a lot of high earners who listen to the show.
Yeah, I think backdoor Roths, when they make sense, they absolutely work, because it's a way to, we call it stuff more cash right into the tax-free side. And so it really, really can be a nice strategy.
Yeah. Yeah. I learned about it probably 10 years ago and I was like, "Whoa, is this?" As a tax attorney, I was like, "Whoa, is this legal?" And yeah.
Yeah,
No,
exactly.
that's awesome. So this leads perfectly to my next question because you gave a general answer without knowing a person's facts and life and what other deductions they have and what income they have and the different types of income streams. So that leads to my question of when does doing it yourself become dangerous? Because both within my legal and wealthy community and as a trust and estates lawyer, I see a lot of people, they kind of wait to hire an advisor or really have a tax strategist or an accountant who understands, or ideally having the whole team communicating. What do you think is the point that someone really should have someone, have someone really looking at everything and saying, okay, this is my recommendation based on what's going on with your finances and your life?
Right. Yeah. I think, there's a point in time where you have to really come to a couple things. One is, do you have the time really to, pay attention to your own, right? And if you have a retirement plan at work and you're saving some money and you have not looked at it quarterly, uh,
Mm.
like where
Quarterly.
the balance is, the allocation, right? And you're just to set it and forget it, or you haven't opened the account in a year, that may be a clue. That's number one. And then the second piece of it is, I don't care what profession you're in, and we work with a lot of professionals, doctors and lawyers and, other executives. And um, there has been so many tax law changes, right? We've had three legislation, we've had Secure Act, and then we've also had the one big beautiful bill now. And so we have a hard time doing this full time. And as you know, being in the trust, we have a hard time keeping up with it. And this is what we do, right?
Yep.
50 plus
Yep.
hours a week. This is what we do. So there's just no way, if you have a career and a life, there's no way that you are keeping up with everything. And then the last piece is there's a lot of it. If you're doing it on your own, there's potential ways and strategies and planning that you don't know what you don't know. So
Yep.
and you just don't know that. So this is more than just having the understanding of picking some stocks, right? This is really having, someone that has the experience. I think about it this way is, if I'm going to go in for surgery and have heart surgery, I want a heart surgeon that does, dozens a month.
Yep. Yep.
Because they've seen it all. I don't want somebody that's done it once a month or, a couple times a month. And we've seen a lot. So, we help people. We've done this for a long time. So we've seen a lot and we've seen it on the other end. So we know what it takes. And back to your question earlier, what does it take? We know what it takes to make someone successful. And success is different for different folks. And a lot of times it's not all about money, but money
Yep.
gives you the optionality. So those is how I see it, is to when the need is, right? The other thing is we just provide that checkpoint, right? So
Yeah.
we provide the checkpoint of how's it going? Well, I didn't do very good on this. That's okay. And it's that personal coach. Think about top athletes. Top athletes still hire coaches,
Yep.
right? They're at the
Oh yeah.
top of their game, but pretty much most of them have, physical, mental, right? They hire coaches to strive for being better.
This episode of Legal and Wealthy is brought to you by Law Firm Sites. Law Firm Sites has been building custom websites and providing online marketing for law firms for over 23 years. They are good at what they do because that's all that they do. If you are looking to expand the reach of your firm or just improve your online presence, Law Firm Sites has the team to do it. Go to lawfirmsites.com or call 1-800-932-8242 and mention Legal and Wealthy to receive 10% off any of their website or marketing packages. Yeah, 100%. I love that piece truly, because I think what I've noticed with my lawyer clients and those in my community is we try to just often do things ourselves. We think we can, and it's oftentimes you just get busy and you can't keep your eye on the ball. I mean, like you said, there's been so like those tax changes have all happened within the 15 years I've practiced, and I'm like, oh, whoa, what's happening? And even
Exactly.
for me, it's keep, like you said, keeping on top of everything. So I love that, and I love looking at it kind of from that perspective of, you know, our money is working for us. How can we make sure that we are keeping our eye on the prize, and having a professional involved and holding your hand and coaching you through that, I think is huge. I think that's huge. And I think that kind of ties into the personal CFO, right? Because, you know, I work with a lot of really high net worth families, and they have family offices and they have all of this, but I'm not a billionaire yet, you know, I'm working on it. And most of our listeners are not. We're growing our wealth. What is a personal CFO? What do they do, and who needs one?
Yeah. So you brought up the term family office, and maybe your listeners might be a little bit familiar than, let's call it, general, populate general public. And so family office is, yes, for the ultra wealthy. The family office has been around for a long time. I actually think the Rockefellers, I believe, was one of them that pulled the family office, and that's what I've heard. Family Hiltons is another one. And so what the family office is right, they work with one family. There could be 150 in the family, but they're working with one family. And, the reason why they did that is they were really, really sharp people. Obviously, they didn't get to where they're at, just because, but they also realized we don't know it all. And so we want someone to advise us on all things financial. And so the family office is, yeah, portfolios, tax, estate, negotiating real estate, homes, bill paying, right? It's kind of an all in one. And so what we saw was what we call middle income America needs a lot of that service. They're not going to need someone to go negotiate buying a plane, but they need someone to kind of pull all that together because they kind of had the lawyer out there, right? They had the financial or investment person, they had a tax over here, insurance, and they're really not talking to each other. And
Oh, yeah.
so we found that, as a personal CFO, where, in an organization, in a company, a CFO kind of brings the financials together, but they're bringing all aspects of the business in. And that's what we help people do. We say, look, we really want to be, right, the person in the middle of your spoke, right? We're in the center and helping you do that. And because we're a fiduciary, which you mentioned, we don't sell product. We're not product driven. So, we want to help you and along the way because of these complexities that I mentioned on the mountain and climbing the mountain and coming down and more complexities, law changes, and so forth. And that's where it grew out to say, the personal CFO concept, meaning we want to help you in all aspects and coordination.
You are speaking my language, Erik, because I have seen it time and time again where the right hand is not talking to the left hand, no one's coordinating. And it's such a missed opportunity because each of us in the various roles that we play, we have different touch points. We see different things and we have different expertise. And if we talk to each other and we're meeting with our clients together regularly, it's where the magic happens. It's where, things that would have been missed are caught. It's where, you are usually in your role going to know the family better than any other professional in the mix. That's just kind of the reality and the nature of the relationship. And I love that. And we've totally tried to do that within our own firm. It's one of the reasons I left Big Law and launched a boutique law firm was so I could choose who to work with and how to do it. So I just get like so excited when I hear other professionals looking at it, like that because it is. And again, you don't have to be super, super high net worth for this to make sense. This show's probably going to come out just the beginning of the year, so we're in end of year, and now we're getting into tax season again, which I don't know how the heck that happens so fast. But for all of us, we need to know, okay, what do we need to do by the year end? We have a lot of clients trying to get their trusts and estates in place, which I'm like, should have done this, in April, but it's okay. There are opportunities, and if you don't have people looking out for you, you will miss them because we all have our specialties. You might be a criminal law attorney or you might be a law student. Like you don't necessarily know, like you said, you don't know what you don't know. Let's talk about taxes again. I said retirement, you're probably like, oh, not sexy. Taxes, I think taxes are so important. Why do you think that they are often a bigger threat than the investments that people are making?
Well, I just think a lot of people from a tax, there's taxes, tax preparation, and that's where they're at. And tax planning, right, is just so often overlooked. And in our industry, it's also that tax planning is somewhat overused, I
Mm.
think, and really digging down deep. When I think about folks, it's, right now, as you sit towards the end of the year, this is launching the first of the year, but what what what's your tax bill going to be like? You shouldn't go into it going, oh my gosh, I have no idea where I'm going to land.
Yeah. It's not a good
And
feeling. Not a good
yep,
feeling.
yep. And if you do tax planning, then you can do uh tax actual true tax planning and maybe strategize. and say, okay, what do I do? And there's a bunch under that tax planning arm, and quite frankly, taxes for a lot of folks is the biggest nut. So, it's one of the biggest. Certainly in retirement, we're seeing more and more people, right? And this in your field. Certainly, if someone needs care, right, extended care later on in life,
Oh yeah.
that certainly can come out, and that can be a large expense. But if you look at a lifetime expense in retirement, taxes are it. And what's pushing people there is these qualified deferred money we talked about, because qualified assets has grown into the many trillions that have yet to be taxed. And what you're forced out forces people into higher tax brackets. They're paying more on their Medicare. So it's a huge nut. So we have a lot of clients that are paying more in retirement in a year than they paid in a year at any time they were working.
Oof.
So,
Wow.
um, so that's why, I think taxes from a perspective of true tax planning. And unfortunately, a lot of times they get tax preparation and they don't get tax planning.
Mm-hmm. It's so true. I see it all the time with our clients. What do you think some of the best tax strategies at like the middle of career, people are high earners, maybe they're in big law. Do you have like a favorite strategy or two?
Um, well, I mean, when I think about tax planning, I think about tax deferral.
Mm-hmm.
So that could be things like we're talking about earlier with the pre-tax and so forth, right?
Yeah.
And then there's tax mitigation. So mitigation could be, how do you mitigate tax? There's a lot of strategies that you can use, different if you're a business owner versus not. There's a lot of mitigation strategies. In fact, we do a lot of the mitigation, and all of these strategies we've just, over the last 2-3 weeks, even as we end the year, I mean, their inflows in these strategies are up 200-300%.
Wow.
And the reason why is, I think, we've had a really good market. So people have had increase in assets. So they're trying to re-diversify. If it's been good and they work for a company, there's probably profit payouts and stock payouts. And
Mm-hmm.
a good strategy is what are you doing in that balance of pre? And then is there any mitigation you can do? Tax deferral means you're kicking the can down the road. So you're basically saying, I'm willing to defer today, but down the road somewhere, there's probably a tax bill attached. Mitigation is you've eliminated it, right? You're not paying it back. So we just have to define it, and it's case by case.
Yeah. Yeah. That makes a lot of sense. I think my favorite strategy, although it's not always the easiest, is still real estate. I have found both in my big law role and now being a law firm owner, it's not always easy. It can be a lot of work. But I like that strategy just because of the tax benefits. But it's not easy being a landlord. I will
Right.
tell you, we've had some issues over the years.
It is. Yeah. I mean, real estate certainly can be a great strategy. And you're right. One of the challenges, again, I see on the other end is when people want it, depending on the real estate you own, and, but when they want to slow it down and retire, getting away from the management of it
Hmm.
becomes the challenge. So,
Yeah.
so just, that's part of the plan, right? If people are willing and they want to do that, it's okay. What's on the other end of it potentially? And that certainly can be one of many opportunities and strategies.
I love that. I love that. What would be, we talked about the personal CFO, we talked about kind of the family office concept, even for those of us who are not the Rockefellers. We talked about kind of having the coach to really work with you on the financial piece. What do you think with any professional, but especially lawyers, what do you think our biggest blind spots tend to be when it comes to money?
Yeah, I mean, I think probably the biggest blind spot is, a couple things I think about. If you are, kind of on the owner side, is okay, how does that all play out for you down the road, right? If you're in a large partnership, how does that play out? That could be a blind spot. It could
Mm,
also be maybe relying on, you know, something that may or may not be there. So, you want to have
yes.
diversification. We talk about diversification in a portfolio. You want to have some diversification there. The other blind spot, quite frankly, and which is with the professionals we work with, because we're working with them, they've realized that, you know, if they had the time, they could probably do a lot of it and do it
Right.
well because,
Right.
we're well educated, we can kind of figure it out. Many were do it yourself, we figured it out along the way, but they've come to the reality and said, even though I have all that, it's better for me to have someone helping me.
Yeah.
So, I had a doctor one time say, I do not give myself my own medical advice.
Mm, wow.
And
Wow.
it kind of stuck with me
Yeah.
because he said, I realized that, and obviously in the medical profession has gotten real specialty, right? But he realized that I'm not being true to myself. And B, I don't know all to be all, right?
Wow.
So
Wow.
I think part of it is when you're, in a role that you have success, you've gotten through the wherewithal, all the education, the hard knocks, and you take it on and say, yeah, I can do this. Well, again, things have changed so fast and they continue to change is um you have to come to that realization and say, well, maybe that's not the best thing for me.
Okay, you said a few things that I think will definitely stick with me. The one you said about the doctor, I don't give myself medical advice, and you said I may not be true to myself, right? If we're advising a client, we're going to see things most of the time very objectively, and we're going to be looking at it with like that professional bird's eye view. But if we're giving ourselves advice or we're looking at our own finances or whatever it is, it's so true. I never really thought about it like that. It's so true. Are we honest with ourselves? Are we able to be objective when it comes to our own money situation? I never thought about it like that. I never
Yep.
thought about it like that.
And the other thing is that I think is really important, it's easier to avoid a problem when you're planning than
Mm,
fix an existing one.
yes, that's so
So,
true.
if you're not objective with yourself, then you might do something, right? That okay, now you're locked, so to speak. Versus from a planning perspective, you can talk it through directionally. And one of our roles, as a fiduciary is, we're to be in the best interest of the client. And so sometimes we're telling clients we think this is what you need to do in the best interest. Now it's your choice, obviously, if you do it or not. And it may not be the best, may not be what you want to hear, but we really believe, based on our experience, knowledge, and expertise, this is in your best interest. So I think those are some of the things that people I think would get value out of and kind of think about as they can move forward.
That's so good. The other thing that you said earlier on that stuck with me was kind of that diversification piece. I think about this a lot in the context of lawyers because I look back to, before I started my own firm, I was about to make partner in big law. And so I started asking a lot of questions about, because at that point I had been an associate, so there was a salary and you didn't know what your bonus was going to be, but you kind of, well, you didn't really have a sense, but you knew sort of what might happen based on how the economy had done that year. COVID was like a really weird year where they cut our pay and then they gave us COVID bonuses and extra pay. So who knows? But I started asking a lot of questions about, okay, as a partner, when do I get paid? How do I get paid? If I want to be an equity partner, what do I need to do? And I started realizing, because I was just being really nosy and like trying to really figure it out. And I feel like no one was talking about it. What I kind of realized was a lot of lawyers, and I've seen this within my own client base, they don't diversify that much. They rely so heavily on the high income and the bonus. But sometimes partners are getting paid only a few times a year or at one point in the year. And I just find it was very shocking to me, not coming from a family of lawyers, that that's kind of how things go. And so if you don't have that diversification, you are kind of a sitting duck in a lot of
Yeah.
ways.
Yeah. I think that's a great point.
Yeah. Yeah. So this has been incredible. I mean, we covered so many different topics, and I really think that people are probably, if they're not driving, taking notes. Where can people find out more about you, about your book, or even reach out to you if they're like, okay, this is the wake-up call that I needed. I need to call Erik right now. Where can people
Yeah.
find you?
Yeah. So, I did write a book called The Personal CFO Revolution, and they can get a free copy. So I'll send them to our site at hilltopwealthtax.com/podcast. So it's hilltopwealthtax.com/podcast. And on there,
We'll
you
put
can
that in the
download
show
it.
notes too.
Yep. Great. You can get a free copy. And, if you want to talk more, you can schedule a 15-minute introduction call with one of our team members. They'll find out a little bit more about you. You find out a little bit more about us. And then if we think there's a fit, we'll connect you with one of our wealth advisors just to have a discussion, to kind of see what your goals are and see if there's a fit. And there's a lot of other information on the website as well.
Amazing. Thank you so much. And I'm going to check out the book, and we'll read that. We have a money and mindset book club within the legal and wealthy community. So we will read that as one of our 2026 books, because I love the concept. It's something I'm incredibly passionate about as well. So I'm excited. I'm excited to read it. Thank you so much, Erik, for being on the show. I really, really enjoyed our conversation. I learned a lot. Thank you for being here. We so appreciate you coming on the show.
Hey, thanks for having me. I enjoyed it.
Thanks for tuning in to Legal and Wealthy. If today's episode sparked something in you, take it one step further. Share it, leave a review, or come connect with me inside the legal and wealthy community. Remember, wealth isn't just about the numbers. It's about how you lead, how you live, and how you build beyond the billable. You already have what it takes to create real freedom and wealth. I'm just here to help you claim it.